Americans are searching current mortgage rates because buying a home in 2026 feels like stepping into a financial storm. Mortgage rates are hovering above 6% again, and every tiny movement changes monthly payments by hundreds of dollars. Families who waited for rates to fall below 6% are watching the market bounce back upward after inflation concerns and global uncertainty rattled investors. The average 30-year fixed mortgage rate recently stayed near 6.3 to 6.6%, and that has millions of buyers refreshing lender websites daily. Some first-time buyers are delaying purchases, while others are rushing to lock rates before another increase arrives. Real estate agents are seeing hesitation, refinancing activity is slowing, and social media creators are flooding feeds with housing advice. People are no longer casually browsing homes online. They are calculating survival costs. A difference of 1 percentage point can change the total interest paid over decades by tens of thousands of dollars. That pressure is exactly why this topic exploded on Google Trends in the United States. Mortgage rates are now connected to inflation, Federal Reserve policy, rent prices, and even geopolitical news. For millions of Americans, mortgage rates are no longer boring finance numbers. They directly shape dreams, stress levels, and long-term wealth. Every headline about housing now spreads instantly across TikTok, YouTube, and Google searches, turning mortgage rates into daily national conversation everywhere online. What makes this story even bigger is the emotional pressure crushing average Americans right now. Home prices never truly dropped after the housing frenzy of previous years, and now high mortgage rates are creating a double wall that blocks millions from ownership. Young adults with stable jobs are discovering they still cannot comfortably afford monthly payments. Couples who once qualified for large loans are suddenly approved for far less money. Investors are becoming cautious, builders are slowing projects in some cities, and renters are feeling trapped because rising rent prices make saving nearly impossible. Every Federal Reserve meeting becomes headline news because people desperately want clues about whether borrowing costs will finally ease. On social media, creators are posting dramatic examples showing how a 6% mortgage versus a 7% mortgage can completely change affordability. That kind of content spreads quickly because viewers instantly relate to it. Americans are comparing today's rate to the ultra-low rate seen in the pandemic years and wondering if those numbers will ever return. Financial anxiety has transformed mortgage discussions into mainstream entertainment content. People who never cared about economics are now watching housing updates every week. In 2026, mortgage rates are not just financial indicators anymore. They represent hope, fear, timing, and the future lifestyle people believe can they realistically afford for themselves and families. Another reason this topic is exploding online is because people are searching for strategies to survive the market instead of simply understanding it. Buyers are learning new terms like adjustable rate mortgages, buy-downs, refinancing windows, and alert sell sessions because they're trying to reduce monthly costs any way possible. Mortgage lenders are aggressively advertising creative offers, while financial influencers on YouTube compete to explain whether waiting is smarter than buying immediately. Some experts argue rates could slowly decline if inflation cools later in the year, while others warn that economic uncertainty may keep borrowing costs elevated longer than expected. That disagreement creates endless debate online, and debate drives views. Americans love financial content that feels urgent, personal, and connected to everyday life. Mortgage rates hit all three categories perfectly. One viral video showing how much interest someone pays on a 30-year loan can instantly generate millions of reactions because viewers picture themselves in that exact situation. Homeownership has always symbolized stability and success in the United States. So when rates rise sharply, people feel like the traditional American dream becomes harder to reach. That emotional connection is when I search watches for mortgage help, affordability calculation, and refinancing options are consumers not only growing rapidly, they're not curious anymore. They are actively searching for answers that could protect their financial future before conditions become even more expensive. Craziest part about current mortgage rates is how deeply they influence industries far beyond real estate itself. When rates rise, furniture sales can slow because fewer people buy homes. Construction companies adjust hiring decisions. Banks tighten lending standards. Even moving companies and home improvement stores can feel the impact almost immediately. That chain reaction turns mortgage rates into one of the most powerful economic signals in America. Investors monitor Treasury yields daily because they often influence mortgage pricing, while ordinary families simply wonder whether they should buy now or keep renting. This uncertainty creates nonstop online engagement because nobody wants to make the wrong financial decision. Some people fear buying at high rates and watching prices drop later. Others fear waiting too long and missing opportunities entirely if rates rise again. The internet thrives on uncertainty, and housing uncertainty is everywhere right now. TikTok clips comparing monthly mortgage payments from different years are gaining millions of views because the numbers shock people instantly. A home that felt affordable a few years ago now costs dramatically more every month. That reality makes viewers emotional, and emotional content spreads fast online. In many ways, mortgage rates became a cultural topic instead of only a financial one. They now influence dating decisions, family planning, relocation choices, career moves, and even mental health conversations across the United States. Right now, the biggest question Americans keep asking is simple: where do mortgage rates go next? Nobody can guarantee the answer, but millions are following every economic report searching for clues. Inflation data, unemployment numbers, Federal Reserve speeches, oil prices, and global conflicts are all influencing expectations for future borrowing costs. Some analysts believe rates may slowly stabilize near the low 6% range, while others predict another wave of volatility if inflation remains stubborn. That uncertainty is exactly why current mortgage rates became one of the hottest searches online. People are hungry for guidance because the stakes feel massive. Buying a home is often the biggest financial decision of someone's entire life, and even small changes in interest rates can reshape long-term wealth. For content creators, this topic is perfect because it combines fear, money, hope, timing, and personal ambition into one conversation. Every viewer immediately understands the emotional weight behind the numbers. Whether someone already owns a home, wants to buy their first property, or hopes to refinance an expensive loan, mortgage rates affect nearly everyone directly or indirectly. That broad impact guarantees massive search traffic, strong audience retention, and constant discussion across social media platforms. In today's